This is my first video on technical analysis. This video will be part of a series where I'll be covering more about the topic. So the first question is, what exactly is technical analysis? Technical analysis uses patterns in the market data to identify trends and make predictions in the market. So the question then comes, should I use technical analysis or should you use fundamental analysis? The answer to that question is there's no actual answer. So you got to see what works for you, because I know some people that trade solely based on fundamental analysis and they've done well. And I also know some people that have traded solely on technical analysis and they've also done well as well. So it's a case of finding out what works best for you and taking it from there. And remember, practice makes perfect as well. So in order to get started with technical analysis, you need to know what the charts mean. So essentially, this is a page from TradingView, which is a place where you can see all of the charts and you can do some drawings and things on it as well. I strongly recommend TradingView because it's a good place for this. Whereas most other places, they'll have the charts, but you might not be able to draw on it. So you've got the date or the time on the bottom here, and you've got the price over here. And then whatever you're looking at, you've got over here. So this is the chart of the S&P 500. As you can see, there are lots of candles, red and green. And there's also something over here as well that says 1 day. So in order to get started, you need to know two things. First of all, you need to know what is meant by time frame. So time frame is over here. It says 1 day here. So what that means is one candle is equivalent to 1 day. That's yesterday, that's the day before. But the point is, each candle represents 1 day. The time frame can be changed. You can have it as minutes, you can have it as hours, you can have it as days or weeks. So for example, this is the weekly chart of the S&P 500. That means one candle here represents 1 week. That's last week, the week before, and so on. So I can zoom in further and show you. That's this week, last week, the week before. And if I switch to daily chart, here's today, here's yesterday, and here's Monday, and so on. So that's the difference between time frame. The next thing you need to know is you need to actually know what each candle means. So for that, I've drawn it out again over here. So as you can see here, you've got a red candle and you've got a green candle. So what each candle means depends on the time frame you're looking at, as I've mentioned before. So if you're looking at the daily chart, that means one candle represents 1 day. And if you're looking at the weekly chart, one candle represents 1 week, and so on. The candle, they have these tails, and the top of that tail means the highest the price has been to in that time frame, in that candle. So if you're looking at the daily chart, and this is the daily candle, then this thing over here is the highest that the price went to on that candle. And then similarly, you've got the opposite for the bottom. So that's the lowest the price went to on that candle. Then you've got this part over here, which is part of the body. So the top of the body, that's the price of whatever you're looking at when the candle opened. So if you're looking at the daily, when the day actually started, this is the price that it was at the start of the day. And then this would be at the end of the day when the candle closes, that's the price. And it would be the opposite for green candle. So this is the candle closed price, and this is the candle open price. I've drawn arrows in just to visualize it further, because red is generally associated with down. So the overall direction would be down, hence why the open price over here would be here, and here would be the closing price, and then the opposite for green, so down to up. So that's what you need to know as a beginner to technical analysis. I can zoom out of charts. So this is your daily chart of the S&P 500, and you can see it goes quite back. I can go all the way back to 2014. But it's very unclear because there's a lot of candles fit into this picture. But if I switch it to the weekly chart, for example, this goes even further back. This goes all the way down to 1970. and it's a bit more clearer. I can zoom in to that same 2014 that I was looking at for the daily, and it looks much more clear to me. And similarly, I can go to the monthly chart as well, and it's much more clear as well right now. So just depending on what you are looking at, that's what the time frame that you should be using. Generally speaking, if you're a long-term trader, you'd be looking at the weekly or the monthly charts. If you're more of a shorter-term trader, then you're looking at the daily chart, maybe the weekly chart, and maybe something even smaller. So like I know some people that do 4 hourly. It's not something I recommend, but there are people out there that do that. So this is my first video on technical analysis. I'm going to make much more through the weeks. So if this has been useful for you, then subscribe.